Hi everyone, welcome to 5 Minutes with the Guru. I'm Peter Nonamaker from Hill Ross MacArthur, and I want to spend a couple of minutes just talking about how life changes really quickly. Now, last weekend I was just innocently picking something out of the garage, but about 5 seconds before I walked into the garage I pressed the down button, run into the garage, not realising the doors coming down, and that's right, smashed right into my head. Nearly broke my nose. Wasn't a really good situation. And I reflected on that because about 10 seconds earlier I was as happy as Larry, and then my face was a little bit smashed up. And I thought, life's a bit like that. Sometimes you're cruising along, life's rosy, someone drops dead, house burns down, we have an accident, life changes really quickly. But what can we do about that? Well, I'll tell you what you can do about that. You can do a lot about that. I think while you're fit and well, the opportunity is there to make sure that you've got your things in order. What are your things? Your estate planning. Have you got your will up to date? Things like that. People leave to the last minute. Some people don't even know where their wills are. Some people, their situation's changed and their will that was done 25 years ago is not relevant anymore, but they don't know that because they haven't reviewed it or read it. So now there's a chance to pull out your will, and if you haven't got one to pull out, organise with a solicitor to get your will up to date and to make sure it does what you want your estate to be, who you want to give your assets to when you're not here anymore, so they're distributed in a tax effective way to your beneficiaries. Also, here's a time to look at insurances. People at the moment are finding that the insurance companies in the country have kicked up their premiums, and I've seen anywhere between 20 and 95% increases in insurance premiums. So it's on the side of ridiculous in some cases, but it's also the opportunity to make sure that your insurance policies are the best they can be and the most cost effective they can be. And how are you paying for them? Are you paying them out of your superannuation money? Are you paying for them out of your back pocket? They're all things that you need to consider. The most important thing, that you are insured for whatever your requirements are. So if you've got a big mortgage, you've got young children, there's reasons why you'd have insurance. If you're sick and you've used up all your sick leave and you've got no holidays, who pays the bills when you can't work anymore and your employer says you're a nice person but I can't pay anymore? That's where you need income protection insurance. So all those types of insurances we can help with. Just give us a call at Hill Ross MacArthur. Now, the Reserve Bank just reduced interest rates on Melbourne Cup Day. You would have seen that. So interest rates are as low as, can't say as low as they'll go, but they're very low. They were 0.25. The Reserve Bank's put them down to 0.1%. Now, this is in November. The 10-year bond rate, the most secure investment you can get, is a Commonwealth government bond, and they were paying 0.7%. So you got cash at 0.1, you got 10-year bonds at 0.7, really cheap money. What's that mean on the other side? If you're investing money in these assets, you're getting a very low return. Now, some people say it's not even worth putting in the bank anymore, and they're putting it into their mattress. Now, apart from being pretty uncomfortable to sleep on, it's probably not the wisest thing to do. So have a think about, for example, some people are scared of shares, but the share market is such a big animal. There's good things and bad things. That's where you need to get good advice. But the average dividend paid from companies on the share market is about 4%. Most of those will pay fully franked dividends, which is 30% tax credit to you. So effectively, you're getting about a 5 or a 6% return compared to 0.1, 0.7, 5, 6% is pretty good. If you look at property trusts, probably paying about 5, 6% income from those as well. So once again, you've got to look at certain assets are paying higher incomes, and that will assist you to keep your standard of living and also grow your wealth. And when interest rates are low, consequently, some of the other assets suddenly become cheaper, and you see the share market rise and the property markets rise because people are buying those assets because they're cheap in comparison to the fixed interest in the cash. So there are all ways that we can look at diversifying your portfolio. And in the current market where we've been locked up with COVID-19, haven't been going out much, and obviously haven't been travelling around the world, I find a lot of people have been having their bank accounts growing and you have a look around and suddenly you've got a few extra $1,000 in your bank accounts, well, here's a time to look at having those in a better savings plan, and can you invest those, and can you put your surplus cash that you don't need in the short term away for a better return. There are all the ways that we can help Hill Ross MacArthur. Give us a call, love to help you. Cheers.